Good afternoon, YouTube, and you're all very welcome to Thursday's US session open. So I've accidentally hit the recording button, so just stop that for a second. So today, obviously factoring in on the backdrop of extreme bearishness and extreme volatility in the markets yesterday off that ultra high CPI inflation print. The data today hasn't come in massively inspiring either. We've seen kind of further declines in the pre-market this morning after kind of a dead cat bounce into last night's close. And into the 2:30 p.m. open today, the markets are very much still ticking lower. So let's delve into it. Let's look at the price action. So structurally speaking, first and foremost, the overriding narrative in the markets is, of course, this safe haven nature. With all the risk that's imposed into these markets at the minute, the dollar is, I suppose, witnessing and observing even more continued strength than what we've talked about, obviously, in the last week and this week. In this morning's note as well, I've done a couple of preview videos and details, so for any of the community members, you can reach out and see that. But we're seeing that broader dollar continuation of strength as a safety asset. So we know that the dollar has been massively overvalued in current market circumstances, but given the narrative, given the volatility associated with it, we are still seeing the dollar being taken home as that hedge. So given it's the global reserve currency, given that it's the mechanism for institutions, for professional investors to hedge against the volatility, we are seeing that hedge play out week after week after week consistently in these current markets. Now, of course, we talked about it yesterday, obviously today in our community, regarding the 40-year high inflation figures. The CPI figures in America have now reached a 9% handle, something that's been echoed by professionals like Mohammed Al-Arian. And of course, even within our own community group, we've been talking about the narrative associated with a 9% inflation runoff target. So structurally speaking, the markets at present are still very much tilted to the upside in terms of dollar strength, in terms of that risk of fundamental bias that we are currently seeing in these markets. Now, again, in addition to that, we're also seeing volatility in terms of the indices, in terms of the gold markets, in terms of our treasury yields as well. And we've talked about in recent weeks, Chris, myself and Neil, regarding the yield curve inversion. And of course, we are still seeing these yields tick into this 2.95, 2.93% level that we've kind of talked about. And of course, in that broader narrative, we're seeing that volatility back and forth between this 2.7 and 3.1, 3.2% previous highs in the 10 years. So I suppose now over the next few weeks, it'll be a case of, given that we have seen a little bit of a relief rally in the 10-year yield, how does that play out? And of course, at this moment in time, not very well, because on the broader perspective, in the broader narratives, when we look at our NASDAQ, when we look at our S&Ps, when we look at our Dow Jones, collectively, all three indices are still turning lower. Now, this chart's a little bit messy, but we'll break it down shortly. But again, just to get that broader narrative and market outlook, we're still seeing these markets tick broadly lower week by week and month by month. So we just have to be kind of relative to that. I still think it's too early to be kind of looking at longer term buys in these indices, because we have yet to come across and yet to test the pre-COVID highs. So that massive pre-COVID move, we talked about it last week, we talked about it over the last number of weeks. And this move here in, let's say, any of these major indices, we're only getting down to where we were pre-COVID, and that is approaching fairly rapidly, fairly quick. But we still have a lot more potential areas of decline that if we are to look for downside progression over the next 3-4 months, it'll be a case of assessing these pre-COVID highs as your first, I suppose, psychological level from a market participant point of view. And of course, then setting out a longer directional bias. Now, of course, with the inflation figures yesterday, 9.1, core still ticking higher, it'll be a case of assessing that narrative as well. So obviously, as long as the figures remain elevated into this 8.8, 9%, even above 9%, it puts a lot of volatility into these markets, and that will remain. So it's a case of, I suppose, being able to assess that accordingly in terms of your price action structures. Now, that obviously refers to both the longer term traders and investors, and of course the shorter term traders as well. Now, bringing it into the shorter term perspectives, we have seen that massive sell off yesterday. We talked about it yesterday at the open. These specific levels of interest, 30,500 on the Dow Jones, this 3750 level, approximately speaking, on the S&Ps, and of course this I suppose 11,500 level on the Nasdaq, particularly, or kind of more broadly between 405, 11.5 on the Nasdaq. So we can see that out of the three, if you to compare the price action from yesterday's close into today, we actually see that the Nasdaq is the one performing the best, because in relevant terms, we also see that the S&P has effectively engulfed or taken out those initial lows from yesterday's CPI print on both the S&Ps and of course on the even more broadly bearish Dow Jones, as the market and both of those indices also tick lower. Now the Nasdaq performing a little bit better and is underweighted, has a little bit of an underweighted strength in relevance to the other two. Now we do also have to factor into consideration as well the earnings season, which has begun today with the banks launching this morning. So that's going to be over the next kind of 2, 3, 4 weeks. We put out a note. I actually put out a note very, very early yesterday, some kind of assets that I'm looking at in terms of performance, sectors that I'm looking at in terms of performance as well, and of course allowing that to assimilate back into these major stock market indices like our Nasdaq, like our S&Ps, and of course our Dow Jones. So it's important to know the compositions, knowing, I suppose, what's the more important stocks to look at, particularly from a broader indice directive, and also being able to assimilate that into terms of the price action. So today into the Nasdaq, first and foremost, we can see that fairly steady, fairly clear bearish price action from yesterday's CPI data. Of course, we had that massive dead cat bounce as well. We had sell-off, rallied into, I suppose, the close, and we actually started selling off into yesterday's close as well. So we've broken through that 11,700 handle. Structurally speaking, I'm waiting to see if there's any kind of spikes or kind of initial impulses to the upside. We saw it yesterday, just before at 129 on the back of the CPI print. So today's analysis I was doing, we actually saw about a 1.2% increase in the minute before the CPI figure came out yesterday, before we saw that 3.5% sell-off. We saw it again as well on the 12th. On Tuesday, we had that massive impulse around the open, and then the price action failed. So I'll be looking at that, see if there's any sort of kind of relief, initial spikes, take out the highs of the day, hunt in terms of a market maker perspective, and then allow for a more elongated sell-off potentially into the close. So that's what I'm looking at in the Nasdaq. The area of interest that I'll be focused on primarily is this area around 11,700 approximate area of interest. So that's what I'm focusing there on the Nasdaq. If we look at our S&Ps as well, we can see very, very broadly and very, very clearly that the price action, again, clear bearish order flow, massive hunts both on Tuesday and of course yesterday CPI, and continued sell-offs. Now we did clear the order blocks yesterday. The price actions continue to filter down to the downside, and we are now sitting at local lows from those month end of June areas of interest. So this area I think is going to be really important, not just today in terms of the volatility, in terms of the price action, but also in terms of the week, because of course if we are seeing the price action ultimately take out this region today, it really does put the markets under a lot of pressure tomorrow, or into tomorrow's close, the weekly close, but also in terms of next week as well, because we do have the ECB next week. We've got CPI figures in the UK, so we've got a lot of statistical and important pieces of data and information coming out in the next week. So if we're starting to see this price action sell off before that, it only puts more pressure on these markets as well. And I don't just mean specifically in the US, I mean in the Eurozone, particularly with the euro. We're seeing euro back to parity and kind of really struggling around that parity level. We're seeing obviously cable break through 120, and of course in the European indices as well. The FTSE sliding again today, the DAX and the Euro stocks also sliding as well, as the Eurozone is in trouble, particularly from handling that inflation narrative. So as we speak into the open today, we're coming up just a minute shy of the open. So we are seeing the S&Ps kind of falter and kind of accumulate around that 3750 level. From my area of interest, it'll just be assessing the open volume to see if there is any sort of impulses to the upside. Are they brief? Are they more sustained after what's been a very, very heavy selling in the last 4 days or so? And of course, setting out a tone for the rest of the afternoon and of course the week as well, broadly speaking. So again, rounding off as well on the Dow Jones, selling has broken through that 30,500. We are in relative free fall. So at this point in time, I will just be kind of assessing to see where is their local bottoms, local lows coming through. Because if we look at the broader perspective, we have broken through some really important levels. Unless there's a flash recovery, it looks very likely that the price action is probably going to come back down and test those mid-June lows across the board between 29 roughly speaking around about that 29,800 handle. So we're seeing the euro go as well. Currently speaking, you're seeing the DAX continue to fly up on the weekly. We've talked about it this morning on the daily, on the 4 hour, shorter run time frames. The euro moving lower off the week of that, obviously that stronger dollar as well, and we've broken through. So at this moment in time, we've broken through that 108.50, 108.60 level we talked about earlier in the week. And of course now it's just waiting to see, because we do still have a lot of upside areas of interest to look at. We've got 110. We've even got as levels as high as 115 and 116. So at this moment in time, let's just wait and see how that plays out. Gold has also seen relative declines today as well, off the back of very, very choppy volatility yesterday. I did try and short gold yesterday myself. However, this impulse really was, I suppose, a hunt of liquidity as well. We came into this local area up here around 1740, and we've since then turned lower. Price actions broken through some equal areas, and we are continuing to decline lower. So at this moment in time, don't be surprised to see gold this week at or below this 1700 handle. And at this moment in time, we are very, very close. And of course, in the discussion group as well, currently there is a lot of chatter regarding the euro. So let's bring up Euro USD as well in the background. And of course, we will see very, very quickly that the euro is breaking through this parity level, right through parity now. A very clean break, ominous break today, and straight through that one level. I do have areas on the broader perspective in around 98, 97. So at this moment in time, I definitely don't think the selling in the euro is done, as the price action continues to waver. The weaker euro, the stronger dollar, the inverted correlations there, the negative correlations on the currencies is important to factor into consideration as well, because as we know, with the stronger dollar, the inverted or negative correlation shows that you tend to get a weaker euro, and euro USD tends to be bearish in the broader mechanisms of the price action in the markets. So we've broken through here, parity. That's a clean break. That's the lowest we've been now in approximately the early parts of 2002 is kind of where we're looking at now, and you can see right over here now the lowest point we've been since November 2002. So I suppose now it becomes a case of, can we come into this 97, 98 handle here, which is the second half or August September lows from 2002. And of course we do have levels even below that. Could we potentially invert and completely come back into this 90 handle? Well, then I suppose that's the longer term focal point for market participants to try and analyze. But as we speak at the minute, euro USD dollar weakness is still very much intact within these markets. The euro is very much on the back burner, as we see, and we still have a lot of potential areas for weakness here in the dollar. So over the next couple of months, it'll be worth watching the euro dollar to see, do we actually break even lower than through this 97, 98, and maybe back to the 90 handle. But at this moment in time, euro is in trouble. So that's pretty much it for the minute, guys. We're starting to see the NASDAQ waver as well. We're not seeing any sort of recovery in the open. It's still very much tilted to the downside. S&Ps are struggling as well underneath 37.50. If we remain 37.50 into 3 p.m., that's probably going to be the high of the day, and you'll probably see the price action continue to grind lower. So areas of interest, 37.50. Area of interest, as I said, is up here around 11.7, but we're struggling to even get there, and are probably unlikely that we will do so today. And of course, in the Dow Jones, even on the 4 hour, even on the 1 hour, a very, very clear decline at the minute, and the markets are really on the back foot into today's session open. So, of course, into the afternoon then, we had Beige Book last night. Not too optimistic, I must say, reading through it this morning. And of course, the data today not massively encouraging, particularly off the Bank of Canada raising rates yesterday by 100 basis points. So they've gone quick and fast in Canada, catching up with a lot of them, and now has one of the higher interest rates of any of the kind of the G7, G2 currencies as well. And we do have Waller coming out at 4 p.m. So worth keeping an eye on Waller's commentary, could move the markets even further. And of course, tomorrow to end the week, we do have Chinese growth GDP figures out overnight, and we do have US retail sales tomorrow with the Fed and Michigan consumer sentiment. So there's a lot more still to come even tomorrow in terms of the price action, because again, consumer sentiment, retail sales, all of these are kind of leading indicators in terms of economic data. So if you start to see sentiment going, you start to see retail sales going, it's a sure telltale sign that maybe this recession narrative is a lot more poignant and a lot more present than maybe what some people are actually pricing into the markets. And of course, we do, of course, have GDP at the end of the month in the US. So again, factoring in all of these narratives and buy pieces of information, it will allow us to have a more accurate read of the GDP figures coming into the month end. And of course, in general terms, 2 quarters of consecutive negative economic growth does put or does really increase the discussion point regarding inflation in the or recession, should I say, obviously in the United States as well. So we just have to look at that on its own merits as well. So that's pretty much it for the afternoon, guys, all and ladies. Euro under pressure, as we said, dollar flying higher, ripping through that 109 on the index. Gold continued to labor and continue to struggle, and of course our US indices also struggling as well, and even the broader indices are continuing to struggle as well. All right, so guys, trade safe, have a great afternoon,